Hello, good evening everyone. I hope you are doing well. Can you please confirm if I'm audible or not? Can you please confirm in the chat box? Is my voice audible to everyone? Fine, it is audible. So, thank you for the confirmation. So, let us begin with today's session. So, hello everyone, welcome to another insightful session of Perspective 360 Degree where we do current affair based answer writing practice in a detailed and structured manner. So, if you are an aspirant preparing for exams like RBI, NABARD, etc., then this initiative is definitely going to help you with answer writing practice for the descriptive paper of phase 2. So let us begin with the discussion, and as you would already be knowing that the topic that we are going to discuss today is with respect to the report of the Committee on the MIBOR benchmark, and this report has been released by Reserve Bank of India, which is the RBI, and we know that RBI's report are very relevant and are very important as far as our exam is concerned. And that is the reason why we are discussing this report, and this report was released just 2 weeks back. So you can see it was there all over the news, and that is the reason we are discussing this topic as a part of the session. So I hope the agenda is pretty much clear to you. Now, if we see the relevance of this topic as far as your syllabus is concerned, then under the financial market, this topic is important because in this topic, we are going to talk about the money market. This report also covers the dimension related to interest rate derivatives, all such sort of things, which are relevant as far as your exam is concerned. Fine. Now, if you're somebody who is new to this Perspective 360 degree initiative, let me tell you that here firstly, we give you an expected question as far as the discussed topic is concerned. Then we discuss this expected question as a part of this session. Then after that, once the session is done, you have to write the answer of this question in the comment box. That will be evaluated by our team within 48 hours. So if you want your answer to get evaluated, so today is Wednesday, so you have to submit your answer before Friday 5 p.m., which will be evaluated by our team. Fine, and this whole initiative is free of cost. So utilize the benefit as much as you can. So let us see the expected question for today, which is basically discuss the challenges associated with MIBOR, which is Mumbai Interbank Outright Rate, as identified in the report of the Committee on MIBOR benchmark. Explain the rationale behind the committee's proposal to transition from MIBOR to SORR, which is basically secured overnight rupee rate, which I'm going to explain it in a holistic manner, what this MIBOR is all about, what this SORR is all about, and then we are going to see the challenges with respect to the context of this topic. Fine, as discussed in the report. So let us talk about it. But before we enter into the discussions, this is the blueprint that you have to follow while writing your answer in the comment box and also in your examination, where you will divide your answer into introduction, the body, and the conclusion. And as I always say in the class that the introduction should be around 10 to 12% of the total word limit, and the same rule shall be applied on the conclusion also. Rest of the word limit you will be applying on the body part, where you will divide your body into different headings and subheadings. Under the subheadings, you are going to write your different points like this. Fine. And you will try to substantiate these points with the help of either data, facts, or examples. So I hope it is pretty much clear to you. Now, without wasting any further time, let us move on to the first part of this topic, which is basically the introduction. But before we delve into introduction, let me just explain you the basics. Let me explain you the background regarding the topic, which is basically regarding this MIBOR and how is it very much linked to the SORR. So let us talk about it. So basically, the first question that would be there in your mind would be that what do we mean by MIBOR? So MIBOR is nothing, it stands for Mumbai Interbank Outright Rate. And what does it do? What is the significance of this MIBOR? Basically, it is the key benchmark rate. It is the key benchmark rate for the interbank lending. For the interbank lending. So let us say there is a bank A and there is a bank B, And let us say this bank A, who is running short of funds, he wants to avail the loan from the bank. Fine. So for that, that is nothing but what the interbank lending is, and this MIBOR acts as a benchmark rate for the interbank lending. For example, if the bank has to give a loan to another bank or a financial institution, so they can take this MIBOR as a benchmark rate. So they can give the loans like MIBOR plus 2, MIBOR minus 2, MIBOR plus 4. So in such a manner, MIBOR acts as a benchmark rate for this purpose of lending. Now when we talk about the MIBOR here in this discussion, we are primarily going to talk about this call money market. Call money market. What do you mean by call money market? Basically, it is nothing but a type of short-term interbanking lending. Whenever this lending happens on a short-term basis, if I break down this market, then this market can be primarily divided into the call money market, and this notice money market. So call money market is nothing. When we talk about the call money market, in this the interbank lending happens for a overnight period. Fine, for a very short period, not even for one day. It is for the overnight. Another thing about I would say the most important feature regarding this call money market is that the loans that are given under this call money market, let me repeat, the loans that are given under this call money market, that is in context of this interbank lending, these loans are in unsecured form. What do you mean by this unsecured form of loans? Unsecured form of loans basically means that collateral is not involved in such type of loans. The collateral is not involved when we talk about this call money market. Whereas if we talk about this notice money market, they are not for overtime, they are for the longer tenure as compared to the call money market. They are basically for 1 to 14 days, but we are not going to talk about this because the report primarily sheds the light on this call money market only. Fine. So I hope this is clear to you what is call money market, that where the loans are given for a overnight basis, and the loans are of what type? They are of unsecured type. I hope it is clear to you. Fine. And when we talk about MIBOR basically it is used as a benchmark rate for this call money market. I told you that we are not going to talk about notice money market in this whole context of this video. We are primarily going to talk about this call money market only. Fine. And MIBOR acts as a benchmark rate for that. I hope it is clear to you what is the significance of this MIBOR and what is the significance of this call money market. Fine. Now the next question would be there in your mind is that how this MIBOR is calculated. So how MIBOR is calculated? Basically it is calculated based on the average rate at which banks lend to each other. So basically if it is bank 1 and bank 2, so different type of banks can be there. So average lending rate of these banks for this interbank lending, based on that this MIBOR is calculated. Fine. And what type of banks? Not all the banks, there are different banks that are selected by the regulator, and based on the average lending rate of the selected banks and the primary dealers, based on that this MIBOR is calculated. Fine. So I hope it is clear to you what is MIBOR, what is call money market, and what is basically how this MIBOR is calculated. I hope the picture is pretty much clear to you. Now moving on to the introduction part. If the background is clear to you, rest of the details we are going to talk about when we will discuss the body part. Fine. So let us read the introduction for this question. So introduction, you can write very basic form of introduction because the question is regarding the report only. So you can write as the MIBOR introduced in 1998 serves as a benchmark for the unsecured interbank borrowing in the India's call money market. However, as the money market has shifted towards the secured overnight markets like the tri-party repo rate, then the repo rate, then the so because of that the MIBOR has faced challenges in maintaining its relevance. After that you can write that to address the limitations, the SORR has been proposed as a more robust alternative as compared to the this MIBOR, and this SORR reflects a broader range of secured market transaction. Now what do we mean by that? I'm going to let you know. I'm going to discuss that in a very short time. Fine, in the next slide only. But I hope the introduction is clear to you, that what we are trying to adjust the theme of this introduction based on the relevance of the question. Fine. So now let us move on to the next part. The next part is nothing but it is a body part. So let us first talk about, in the body part we are going to divide our body into two parts, which is basically the MIBOR challenges, and after that we are going to see the proposal of transition to SORR, which is secured overnight rupee rate. So let us talk about the first challenge with respect to the MIBOR. Fine. Now what did I tell you? Basically this MIBOR acts as a benchmark rate for the interbank lending, and primarily we are going to talk about the call money market. Now the thing about this MIBOR is that, or I would say one of the challenge with respect to MIBOR is that I have already told you that this MIBOR is based on the unsecured loans. It is primarily based on the unsecured loans. Apart from that, it is very much volatile in nature since it is based on the unsecured loans. Apart from that, it is also very much risky in nature. These are the, I would say, the primary limitations with respect to MIBOR. And because of this limitation, the consequences what the since this MIBOR is based on this call money market, which I'm using the abbreviation as CMM. It is based on the call money market, and this call money market has a limitation that it is based on the unsecured loans. It is very much volatile. It is very much risky. Because of the limitation, what the banks are doing, that instead of following this call money market, now they are moving towards the other platform. They are moving toward the other options. What are the other options? For example, the tri-party repo rate, or you can say the repo rate also. So they are moving to this other platforms. And what is the advantage, what is the benefit of this other platform? The benefit is that since this call money market is based on the unsecured lending, it is very much volatile in nature, it is very much risky in nature. But if we talk about this repo rate, if we talk about this tri-party repo rate, these are very much secured in nature. Why they are secured in nature? Because they are basically backed by the collateral. So let us say if there is a bank 1 and bank 2, they have to do some kind of interbank lending and borrowing, also a kind of transaction. So if they will go through this TPR, which is tri-party repo rate, in that case what is going to happen? The collateral is going to be involved, and since the collateral is going to be involved, so that is why this whole transaction is very much less volatile, it is very much secured, it is very much less risky, and that is why the bank has started shifting to these type of different options instead of going through this call money market. And that is the reason why the RBI had formed this committee in order to rethink this idea regarding that what are the different type of transitions we can make with respect to this MIBOR. Fine. So this is basically the idea. Now if we read the points for you, the first point is regarding the limited transaction base. Now if we talk about, before reading that point, let me just explain you what is the TPR, which is tri-party repo rate, because I'm going to use this term again and again, so you should have some sort of basic clarity. So tri-party repo rate is nothing but in this case basically three parties are involved. That is why we call it tri-party repo rate. Basically the bank A, the bank B, and in between there is a custodian. Now if this bank wants to give the loan to the bank A, interbank lending, then this loan is going to be very much secured. It is going to be backed by the collateral. In between there is going to be a third party, or you can say it can be a custodian, it can be a clearing house. And what is the job of this third party? It basically manages this collateral to ensure that whatever transaction is happening between this bank 1 and bank 2, it happens in a safe manner, in a smooth manner, and in a secure manner. So that is the idea. Now since this whole transaction is very much secured, it is very much less risky. That is the reason that the banks are now shifting towards these type of platform, these type of option, instead of going for this call money market. So that is the idea. And because of that, what is happening now, the points are should become very much easier for you. Because of that, what is happening? Limited transaction base is there, because MIBOR is based on the shrinking call money market. The call money market is shrinking because of the limitations that we have discussed. And because of its shrinking size, what is happening? It accounts for only less than 2% of the total overnight money market volumes. So out of all the transactions that are happening in the money market, it contributes less than 2% only. And that is the first challenge with respect to that, because now the banks are shifting to other type of options, for example the TREPs and the repo rate transaction. Fine. So that is the idea. Next is the next point is regarding the low transaction volume. So these points are very much interlinked. The reason is same behind both these points. The first reason is limited transaction base, and the second is regarding the low transaction volume. So this MIBOR is based on the call money market, which contributes less than 5,000 crore on a daily basis and represents about 1% of the total money market. So you can see that out of the overall total money market, this MIBOR is based on the type of parameters that contributes only 1% of it. So you can see that is another type of challenge with respect to it. The second is regarding the concentrated participants. When we talk about the concentrated participants, so basically another limitation is that when we talk about this call money market, on the basis of which the MIBOR is calculated, this call money market basically it it is very much connected to limited type of banks. Fine. So the different type of NBFCs are not there, different type of financial institutions are not there. And even if we talk about the banks are very much limited, on the basis of which this MIBOR is calculated. So basically the problem because of this is that because the banks are very much limited, and the challenge with that is attached with respect to this whole I mean this whole scenario is that this MIBOR is very much dominated by, it is dominated by big banks only. Fine. So the thing is that let us say there is a big bank, that is bank 1, and there is a small bank, bank 2. Now the big bank is offering such type of interest rate, whereas the small bank is offering a different type of interest rate. But how the MIBOR is going to, what the MIBOR is going to take into consideration, because the big bank, it has a large volume of transaction, so the interest rate that will be reflected in MIBOR, it will be very much dominated by this big bank only. And that is the reason the concentrated participants that are there in the bank, it is a very much big challenge with respect to it, because over 90% of the call money market borrowings is concentrated among the top 10 borrowers only, which includes the big banks only. Fine. Making MIBOR sensitive to the behavior of the small groups, leading to possible rate distortion, because when the big banks, what they will do, when they are going to change the interest rate, the fluctuation, the distortions, the deviations will be directly reflected in the MIBOR rate. So this makes MIBOR rate very much fluctuated, very much unstable and volatile with respect to that. Fine. So these are the first set of challenges. The second set of challenges is with respect to the susceptibility to volatility. Now the thing is that the volatility, as I told you, is another a very important, I would say, the challenge with respect to it, because what happens is that this MIBOR is very much sensitive to the liquidity that is in the market. When there is high liquidity in the market, for example, if there is high liquidity in the banking system. Now, what does it mean? That banks already have money, and since the bank of already have money, so do you think that they are going to take there is going to be any kind of interbank transfer, interbank lending and borrowing business? The answer is very less as compared to what it was earlier. Since the liquidity is high in the banking system, so and the interbank transaction are happening at the lesser rate, because of this, what is going to happen? The MIBOR rate, the MIBOR is going to fall, and since the MIBOR is going to fall, and because of the liquidity rate, that is why it is very much volatile in nature. And tomorrow, if the liquidity decreases, what is going to happen? The MIBOR is going to increase, the rate of the MIBOR is going to increase. So what does it show? That MIBOR is very much volatile. If we talk if we compare it, or when we talk about the liquidity that is there in the banking system, so that is the one of the important challenge that is there with respect to this whole MIBOR, with respect to the volatility. The next challenge that is there with respect to is the concentrated borrowings. So when we talk, this is something that I've already told you the context of this point in the previous under the previous narrow based transaction also, that when we talk about MIBOR, it is basically controlled by the large banks. It is basically reflecting the interest rate of the large banks only, and the large borrowers are there, and because when the interest rate of the large borrowers, it keeps on getting changes, it keeps on getting distorted, that same thing is reflected in the MIBOR also. The last point is regarding the large basis spread. What do you mean by spread? Spread is nothing but it is a difference between two interest rate. The difference between two interest rate. Now imagine that the MIBOR in the market is 4% only. The MIBOR is 4%, and let us say the repo rate in the market is 6%. Fine. So what is the basis spread? The basis spread is nothing but it is going to be, in this case, it is going to be 2% only. The basis spread is going to be 2% only. Now what is going to happen if the base spread increases further on? What it is going to indicate? It is going to indicate that this MIBOR and this repo rate are not in, they are not in synchronization. And if they are not in synchronization, what does it show? It reflects the market inefficiency. It reflects the market inefficiency. So which is something that is an unhealthy sign with respect to the market rates, and that is something, and another challenge with respect to the basis spread, the large basis spread that has that we have seen in the past, with which the RBI has seen in the past, and that is another major challenge with respect to that. The third point is regarding the reliability as a benchmark. So when we talk about regarding the reliability of as the benchmark, so thing is that when we talk about the MIBOR, MIBOR is computed based on the transaction from a narrow 1 hour window. So when we talk about the MIBOR, when the MIBOR transaction happens, as I told you that it is based on the call money market, and call money market are for the overnight only. They are for the overnight only. For a very short window is opened in order to do this whole call money market. So the window time is basically, just for your information, it is for 9 to 10 a.m. Fine. So that is the window time that is taken into consideration. So you can see the window time that is taken into consideration for the call money market, which is reflected in the MIBOR. You can say that that window time is very much narrow, and this reduces the reflection of the MIBOR in the broader market trends. Fine. So that is the idea. So that is another set of challenge, that the data set that is used is for a very small time, is for a very small window, for 1 hour only. So that is something has to be changed, and this is another important challenge with respect to the reliability of this MIBOR. The next is regarding the non-bank participation. This is something I've told you, that when we talk about MIBOR, it takes into consideration the call money market. Now, call money market primarily, it is dominated by whom? It is dominated by the interbank transaction. Now, what about the NBFCs? What about the insurance company, who are also, I would say, a dominant stakeholder as far as the lending is concerned? The MIBOR does not take it into consideration all these stakeholders, all these parameters, and that is why. And another challenge of the MIBOR is that it is not very much holistic. It is not very much broad. Its involvement with respect to the financial condition is very much limited. So that is another challenge with respect to that. The last is regarding the inadequate reflection of the systemic risk. So basically the thing is that if we talk about the MIBOR, it is primarily based on the unsecured borrowing only. So that is why it is less representative of the systematic risk that are there in the broad money market. When we talk about broad money market, it includes both the secured as well as the unsecured borrowing. So it does not talk about secured at all. It only talk about the unsecured borrowing only, and that is because of the unsecured nature. It shows the inadequate reflection of the systemic risk that is there in the economy. Fine. So that is the idea. I hope it is clear to you. Now let us move on to the second part of the body, that which is nothing but the proposal for the transition to secured overnight, which is SORR. Now SORR is nothing, we can say it is basically the advanced version of this MIBOR, and this is something that is under research, and more parameters are being added to it. So the thing is that the committee has recommended different type of suggestions with respect to that, how the MIBOR can be advanced, how we can switch from MIBOR to the SORR. So let us talk about it regarding the proposal of the transition with respect to SORR. So what are the different type of recommendations or proposals that have been made? So the first is regarding the broad transaction based. As I told you that one of the major limitations that is there with the MIBOR is regarding the narrow transaction base that it has. So what is the proposal? The proposal is that the committee has recommended that we need a stronger benchmark as compared to the MIBOR, which is nothing but the SORR, which is secured overnight repo rate, rupee rate. Now, as I told you, the MIBOR is based on what? The MIBOR is based on the unsecured type of borrowings. But what about the SORR? SORR is based on the secured borrowing. The changes that are happening with respect to the borrowings that are taken under the umbrella of this secured transaction, that is with the backing of the collateral. Now, if you remember this slide where I talked about that, if I talk about MIBOR, it accounts only less than 2% only with respect to the whole transaction that happened in the money market. But if you talk about the secured lending, the rate, the percentage is very much high. It represents 98% of the total money market volume. That is the reason. Since it represents the higher volume, it represents the more volume. That is the reason the committee has suggested to move from MIBOR to SORR. So I hope it is clear to you. Fine. So which will make it a better reflection of the borrowing cost. The next recommendation is with respect to the improved representation. So SRR is said to be, it is said to be the better representation. The reason being that SRR is based on the secure transaction. For example, TREPS, for example, the repo market, I've already explained you that. And apart from that, since it includes the collateralized transaction, the secure transaction, and that is the reason it is very much less risky, it is very much more stable and very much less volatile. Fine, which basically means the same thing only. But the point that I want to make is that the secure transactions are more inclusive. They account for the greater proportion, the greater contribution with respect to the money market, and that is the advantage with respect to the SORR, because it is based on these secure transactions only. And it also includes the banks, the insurance company, it takes into account the mutual funds and the corporates. But when we talked about the limitation with respect to the MIBOR, we have discussed that with respect to the MIBOR is very much narrow. It includes the concentrated borrowings only, which is dominant by the few large borrowers only, the few big banks only. So which is the limitation with respect to the MIBOR. But when we talk about this SORR includes the diverse participant base, the broader participant base, which includes the banks, the mutual funds, the insurance company, corporates, all such kind of things. Fine. And that is why SORR is considered to be better measure by the RBI. Apart from that, the use of collateralized transaction, what it does, since the collateralized transaction are very much secured, because there is some kind of security or collateral attached to it. So that is the reason, because of this security, because of this collateral, the risk that is there on the party that is giving the loan and also who is borrowing the loan, on both the parties the risk is very much reduced. So the counterparty risk is minimized in this case because of the secured nature of this whole transaction. So I hope it is clear to you. The next is the report also compares the benchmark, though it does not compare the benchmark in a very specific manner. Just an overview type of thing has been given in the report, but it has done some kind of comparison with respect to it between the MIBOR and the SORR, and it shows that how if we go for the SORR, it is going to exhibit the lower volatility and the greater correlation with respect to the liquidity data there in the market, and this also makes SORR more appropriate for the hedging purpose also, and for reflecting the overnight funding rates. Fine. So I hope it is clear to you. The basic idea is clear to you, because we have already talked about these things. Now these are the different recommendations that have been presented in the report with respect to this MIBOR benchmark. These recommendations you do not have to write in this answer, but do you have to memorize it for your exam? The answer is yes. These recommendations are very easy, very straightforward, just the things that we have discussed in the previous slides. This is just, I would say, the opposite of that. So you can see the expand the computation window. There we talked about that, how computation window is one of the limitations of the MIBOR. So the report recommends that expand the computation window. We should do that. Currently it is 9 to 10 a.m. only, which is a 1 hour. Now we should change it to 3 hours. Fine. We need to expand this computation window so that the better accountability or better inclusion of data sets can be taken with respect to the calculation of this whole index or the whole benchmark. Then incorporation of broader transaction, that we have talked about, that currently MIBOR only accounts for the unsecured transaction only, so we should include the secured transaction also as a part of it. Then develop the alternative benchmarks. For example, if we are adding the recommendation as a part of the MIBOR, side by side we should also start developing this SORR in a holistic manner that will present the better benchmark with respect to the interest rates. Then enhance the market participation. We have talked about that, how it is mainly reflecting the big borrowers only, the big banks only. So what we need to do, we need to encourage greater participation in this MIBOR by including the non-bank participants also. Then we need to focus on the transparency and the governance, and lastly limit the impact of the outliers. Fine. So that is the idea that regarding the different recommendations that have been given as a part of the MIBOR. Fine. You do not have to write it as a part of this answer. I've just given you some sort of value addition. These points you can remember. If the question is asked related to it, you can write the recommendation in that type of question. Fine. Now the last part, which is basically the conclusion. So the report identifies critical limitations with MIBOR, particularly reliance on the shrinking call money market. To address this, what the committee recommends, it proposes transitioning to SORR, which is based on the secure transactions, offering better stability and reliability. And this shift would ensure a more accurate and robust benchmark for India's financial market. So that is something, the idea regarding the conclusion, a type of way forward that you can write as a part of it. Apart from this, what you can do, I mean, if you want to prepare this report in a holistic manner, I mean, this is the most important component from the report. This is, I would say, the whole discussion that we did, this was the essence of the report. But apart from that, if you want to cover something else also, you can take it as your homework, or you can do it on your own. In a very short manner, you should also prepare the interest rate differentials. The interest rate derivatives. So thing is that regarding the interest rate derivatives also, the report has given few recommendations. There are around 6 to 7 points only. If you go to the report, just on the last page, if you flip to the last pages. In the last pages, they have mentioned the recommendations with respect to interest rate derivatives also. So you can just go through the recommendations for once. I would not say which is very, very important. I did not find them important, but if you want to cover this report in a holistic manner, you can just go through the recommendation. And why do we need the recommendation? Just basic things you can prepare regarding the interest rate derivatives. Apart from that, I would say this was the most important component, a part of discussion through that report. Fine. So I hope it is clear to you. Now this is the question, the answer of which you have to write in the comment box, and that is it from my side. And these are the blogs, EduTap blogs, where you can read different type of tips, different type of informative articles that can help you in different type of competitive exams. You can go to our website and go through these blogs, and they are going to be helpful for you. So lastly, that is it from my side. So thank you so much and all the best. Anything else? Is there anything in the chat box? Fine. So I guess there is nothing. So now I'm ending the session.